Hello, everyone, and welcome back to another episode of Stock Break with me, Josh Gilbert. Today, we're going to be analyzing Megaport. It's an ASX-listed stock that has kept pace with Nvidia over the last 12 months. And we're here to tell you how they've done that and what you can expect moving forward. But before we start, a reminder to subscribe to our channel and click on the bell so you don't miss any new episodes across the Stock Break series. And as always, if there are any stocks you'd like to see, please let us know in the comments. And if you are listening to this in podcast format and would like to watch along with the presentation, there is going to be a link in the bio and you can head over to YouTube to watch. A quick reminder that the presentation today and anything we discuss is for educational purposes only and should not be taken as investment advice, personal recommendation, or an offer of or solicitation to buy or sell any financial instruments. So on to Megaport. In the last 2 years, we've seen AI sprung into the limelight, and Nvidia has been a big part of that. It is breaking up the famous FANG stocks, and it has helped build the new Magnificent Seven, and it's led the way in performance thanks to this huge earnings growth. They've seen earnings grow by 288% in 2023, taking full advantage of the AI revolution. There is a stock break on Nvidia on the YouTube channel and on the podcast. So if you want to check that out, go and have a look. We deep dive into Nvidia. But the point here is that it's not just Nvidia reaping the rewards from AI. We look to the picks and shovels of the AI revolution, who are also set to benefit from the tidal wave of spending. And Megaport is one of those names that is benefiting. They operate a global network infrastructure and manages this network through software-defined networking, also known as SDN. It offers a platform that allows businesses to connect their IT infrastructure to various cloud service providers, data centers, and other networks around the world. So put simply, let's imagine Megaport as a digital bridge. Instead of companies building separate bridges to each cloud provider or data center that they want to connect to, Megaport is that central point. It provides a single platform where they can easily set up and manage these connections. This makes it faster, more flexible, and also more cost-effective for businesses to expand their network. Shares have had a huge run, as I say, kept up with Nvidia. They've gained almost 200% in the last 12 months. So what we're going to find out today is if that rally can continue. First up, though, we're going to go back in time. We're going to have a quick look at its business timeline, a bit of a look at some history. The business of Megaport was born in 2013 in Brisbane, Australia, and it came with a vision of trying to give businesses greater control and choice about how they connect between services. In 2015, after partnerships with Microsoft, Amazon, and Google, three of the biggest cloud names in the business today, and expanding to Asia, Megaport listed on the ASX. They raised $25 million at $1.25 a share. In 2016, the business then launched into North America and Europe, and they added 180 customers in that time. In 2017, growth continued. New partners were added, including IBM and Alibaba, and they also began starting to provide connectivity between Hong Kong and Los Angeles. Then Megaport continued to move from strength to strength, and they reached 1,000 customers in 2018 and also partnered with another big name in the industry, Salesforce. Shares continued to move forward, and by the time 2019 came around, shares had more than 10x from their IPO. And by 2020, shares reached a record high of $21.46, and they then had over 716 data centers enabled. In 2022, shares sold off. We had a broader tech sell-off, if you remember. Cloud spending slowed, and shares got hit pretty hard. But in 2023, amidst the boom in cloud and AI spending, shares soared, and the company announced profitability for the first time ever. So now we're going to take a look into that, and we're going to have a look into their numbers. We're going to look into their finances and go through their fundamentals a bit more. But firstly, let's find out how they make their money. So here we're going to have a look at the last half-yearly report in February 2024. So for those that are not aware, in Australia, companies will report on a semi-annual basis. So unlike US companies that will report earnings every quarter, Australian companies will report semi-annually and sometimes will provide an operational update each quarter to sort of talk about services and maybe give themselves an opportunity to upgrade guidance as well. But simply, Megaport, how does it make you money? Well, it installs its own equipment into data centers across the world. And what it does, it creates high-speed virtual ports that other businesses can use to expand their network and their capabilities and access the resources that they need. Megaport makes its money from those customers. They acquire them and also by increasing the spend from existing customers. We're in a period right now where we're continuing to see the transition to cloud and AI. Networks are becoming more complex, and we are seeing a sort of a higher data consumption as well. And I think what we're starting to see is an increased usage for Megaport. And ultimately, more customers are turning to Megaport, and Megaport's current customers are using their services more. And what we see across Megaport's business, and we'll get into that in just a second, is that once customers are established, they remain within the ecosystem and tend to organically grow their sales, which is why they have a very high recurring revenue model. So in the fiscal 24 half-year results back in February, it saw record recurring revenue, 192 million Australian dollars. That was up almost 30% from the year prior. And that shows, as I say, that the business is not only retaining, but it's also growing existing customers, whilst adding new customers as well. It's got over 2,800 customer accounts. Names include Tesla, Adobe, BHP, TikTok. So some really, really massive names. And as I say, those new acquisitions continue to roll through. And what we're seeing as well is we've got a lot of new management coming in. So new CEO Michael Reid came through in 2023, and his idea was to improve Megaport's go-to-market strategy. And what we're starting to see is that really bear fruit. So we're seeing an increase in his sales team. They're really going to market and pushing whilst AI is at the tip of everyone's tongue. And we're seeing a huge jump in a lot of areas of the business. Net cash flow jumped to 12.5 million. That was up from the 28 million net cash outflow a year earlier as well. So a big jump. And as you can see there, we have obviously profitability with EBITDA, which is what we're going to sort of touch on now. Megaport's margins are a huge standout. They grew their gross margins to 70% in the fiscal year 24 half-year results, and that helped to deliver record EBITDA of 30 million Australian dollars, growing by 785% year over year. So that is really important to note, right? The business is now profitable. Net profit as well came in at 4 million. Another significant improvement as well. And EBITDA margins are consistently strong across all geographies as well. So North America, APAC, Middle East as well. So again, really positive, and that sort of sets himself up for future growth. And the focus from management is now delivering continued growth as well. So that is something we're going to get onto in a moment. We're going to have a look at what they expect for the full year. But we're just going to have a look at also some key metrics. So as an investor, if you're looking at Megaport, what to watch, how to track the business, how to understand if it is moving forward. So these are some key areas to sort of keep an eye on. If you're going to have a look at their half-yearly reports, these are going to be the numbers you want to watch out for. And what we can see right now is we're seeing growth across all key metrics. And given the growth that we're seeing in AI, we'd probably expect that to continue, especially in the short term. The next result will be in August, so the next semi-annual result. So what we're looking at here, again, if you're listening on the podcast, head over to YouTube and you can sort of see these numbers, but we'll try and break it down for you. What we're looking at here are total services and total number of customers. Customers are growing, and importantly, they're already those already acquired customers are growing their spend as well. So current customers are growing their spend, and they're seeing new customers come in. We're looking for solid customer growth in the second half year update as well, and that is obviously to continue revenue and profitability growth, in the high double digits. So then we look at services. Again, this is the services that ultimately businesses are using, and these are made up from ports, virtual cross connects, which is VXCs, Internet Exchange, IX, Megaport Cloud Router, MCR, and Megaport Virtual Edge. So there are a couple of key points to make here. The highest growth was across Megaport's virtual edge, where we saw 111% growth year over year in February. That is a really important number because this has one of the highest annual recurring revenues per customer at 162,000. So again, really strong, really high. And that fact that we're seeing growth there is really good for the business. Customers using the MVE, which is Megaport's virtual edge, also use more services. So with an average of 19 services per customer, which is better than 11 if they are using other services as well. So that is a key area I'm keeping an eye on. If we see continued growth here, it will be good news for the business. So yeah, let me know what you think. Let me know in the comments if you guys own Megaport, what you think of the business, or if it is a stock that you're going to be keeping an eye on over the next couple of months. We don't have a lot of tech stocks here in Australia on the ASX, so it's nice to have one that's front and center in the AI boom. So I spoke a minute ago about the importance of continuing to see profitability grow. And I think Megaport is finding itself in a sweet spot. They were an early mover in this sort of space, in the SDN, software-defined networking space. And it's making the most of AI. And as businesses more than ever, need to or want to as well harness AI's potential, they're going to be turning to Megaport because companies can ensure they get secure, fast, and dedicated connections between their data sources and AI platforms. So Megaport is right up there. And given those key metrics that you mentioned just a moment ago, Megaport upgraded its full year earnings guidance in April of this year after that February update. And that was following the continued improvement in their operating and financial performance. So for the fiscal year 24, EBITDA guidance was at 56 to 58 million. That jumped from the 51 to 57 million range that they had previously indicated. So again, that would then move to 187% increase if they were to reach that year over year from last year. They also reaffirmed its revenue guidance as well, 190 million to 195 million. As well. And they also maintain full year expenditure guidance of 20 million to 22 million. That is an important number that I think is really important to point out. A lot of analysts have maybe expected that we could see that capital expenditure grow, especially with the new sales team going to market, especially as they look to add new customers. So keep an eye on that number as we go into the full year result in August. If that number picks up, then it may put margins and EBITDA under pressure. But ultimately, we've got to remember that this is a growth business, and sometimes profitability may come under pressure in the short term, if that sales team is going out to market and growing the business. So now we're going to have a look at a SWOT analysis of the business. Very simple: strengths, weaknesses, opportunities, and threats that the business may face. Make it really clear for you to understand. So firstly, strengths. It's obviously, right at the front of innovation and technology. Again, they allow, businesses to easily connect to cloud services, something that we're seeing huge demand for at the moment. Scalability. Megaport's platform is highly scalable. It allows businesses to quickly adjust their network capacity according to their needs. When you have scalability and flexibility, that's very good for your customers. I mentioned it right at the top, but they have some of the best partnerships in the world, working with Amazon Web Services, Microsoft Azure, Google Cloud, Alibaba, Salesforce. That is a huge draw card because these are the biggest cloud services in the world. And they need to work with these customers to be able to actually, you need to have these partnerships to attract new customers in. So, three huge strengths that they have going for them. Weaknesses. I would also say that one of the weaknesses is actually having those partnerships. You have a heavy reliability on those partnerships with those cloud service providers. Any change in these partnerships or competition from similar services, could be an impact. If these partners maybe have better options elsewhere, that they may go there. Obviously, look, these cloud services are going to want to have as many people using their services as possible. So they'll always want as many connections. But again, you're always at the risk of, those partners. They do have high operating costs. Running and maintaining a global network infrastructure. It's not cheap. And that obviously has the potential to affect profitability. especially if it's not managed efficiently. And weakness so far, we're sort of seeing maybe a little bit of a lack of global reach. Again, the business is still very new. We're still in a growth phase. It has begun to expand its presence globally, but I think that we're maybe wanting to see more penetration in global markets. Obviously, there is competition. There is regulatory barriers that exist as well. So again, maybe a slight weakness there for the business as well. So then we can look at the opportunities. Obviously, for Megaport, we're continuing to see that growing cloud adoption. With the increasing adoption of cloud services by businesses worldwide, there is a significant opportunity for Megaport to expand its customer base and, of course, revenue moving forward. Product development, obviously, as AI grows, as cloud continues to develop, there's the option for Megaport to develop new products and services that complement its existing offerings. They have done that within the last couple of years as well. That enhances its value proposition. And of course, annual recurring revenue. The business does have a very strong recurring revenue model. The more customers they add, this will likely continue to increase. The more products they offer, we'll often see customers spending more, and retention is key for the business. So some threats, competitive landscape, obviously with AI booming and the cloud network space growing, we're going to see competition come in, whether it's established players and new entrants. Megaport does face the threat of potentially losing market share to competitors. We'll need to stay at the top of its game. Regulatory challenges when it comes to data privacy, cybersecurity, anything around AI. There are going to be a lot of regulatory scrutiny, I think, over the next couple of years. And of course, any economic uncertainty. If we see an economic downturn, if we see GDP growth slow down across the world, that may see businesses being less willing to invest into technology, into cloud services. We've seen that previously in the last sort of couple of years, slowdown in spending, which has obviously now picked up again, but that could impact Megaport's revenue if we do see a slowdown again. So now we're just going to have a quick look at the challenges and some catalysts as well. So what to watch. There's going to be plenty of things to keep an eye on. Firstly, AI spending. Mentioned it a lot, but it's continuing. But more than ever, companies need to ensure they have the right network to harness AI's potential. Megaport is at the front of that list. Challenges, whilst this may be a positive in some cases, they've got the new sales team coming out that's going to drive customer growth. That's what we want. But an increase in cost can put some investors on edge. Simply put, they leave no room for error. They need to deliver, especially when cloud and AI spending is high. This means that as the business invests for growth, we might see profitability dip, especially when we're obviously seeing such a fast-growing company such as Megaport. Another catalyst, well, we've seen profitability grow in the last 12 to 18 months. Now we're looking for that to continue. And so far, it has. Strong profit growth, beating estimates in the second half of the year after this upgrade. That would be massive and would be another leg higher for shares. Another challenge, well, there are risks here, and it lies in the high expectations. I just put high expectations on Megaport, saying they need to deliver in their full year update. Well, investors expect the same. Shares are up around 200% in the last year, which means there's no margin for error. They look to be on the right track, but it will need to keep growing its recurring revenue base. We need to see either margins staying high or improving, and that is what the market will expect. But that does come as a challenge. Catalyst, growing customer base. Ultimately, we believe that we can continue to see customers growing as they become more mature within the business. So once the Megaport establish a customer, we believe that will continue to see growth within the business, and that should be limited costs for Megaport. So that means that once they've acquired the customer, it shouldn't need any more sort of sales or anything else or product development. They should continue to increase their spending. And ultimately, that should help margin expansion. And finally, another challenge. Look, competition goes without doubt. Competition is going to grow. They enjoyed an early mover advantage, but that may also mean that we see an increase in customer acquisition costs if there is bigger competition and you're having to compete for those customers. So now we're going to have a look at the potential valuation. Interestingly, the Guru Focus Tracker believes that the stock is significantly undervalued. Why is that? Well, it might be due to the strong tailwinds from AI, the super high margins that the business had, and its recent profitability as well. But it does trade at a forward PE ratio of 67 times. That is not crazy high, but it is still very high. And as mentioned, the risks do lie in the lofty expectations that investors now expect. We do have shares sitting off record highs of around about that $21 per share. But to get to that point, we also have to see shares rise by about another 50%. So it does have upside, and analysts tend to agree. They like the stock. They have a resounding strong buy consensus. The average price target that for now, though, is pretty modest. It's at $15.55, which as of recording is about a 7% upside from current levels. So I think what we're seeing here is that analysts are waiting for sort of that full year result and maybe their guidance before considering a higher price target to confirm that the business can keep delivering after what has been a solid run. So let's wrap it all up. As I say, shares have had a great 12 months, gaining over 200%. Its recent upgraded guidance means that investors want to see continued growth in its recurring revenue base, and they want to see margins staying high. The go-to-market strategy from their new CEO will increase costs, but could drive more business, which could be crucial for the future growth of the business. As more business moves their operations online and adopt cloud technologies and artificial intelligence, Megaport should stand to benefit, giving a runway to continued growth. It does currently trade at a forward price to earnings ratio of 67 times, which has left question marks over its valuation. So there is no room for error, as we've said, with those results that are coming in August. And finally, analysts like the stock with a strong buy consensus. So it won't be all one way for Megaport over the next 12 months, and it will need to be at the top of its game to keep up the performance, especially alongside Nvidia. But it has already proven that it can do just that, making this a stock that long-term investors should watch. And that's it for Megaport. Thank you, everyone, for listening and for watching. If you found this episode useful, don't forget to like, share, and, as I say, send to a friend. Let me know if you think Megaport will continue its growth trajectory this year back to record highs, or if you think there will be bumps in the road. A reminder to let us know if there's a stock you're interested in, and we'll break it down. Thanks for watching. See you next time.